Good morning and welcome to the Energy Pathways PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll, and I'd now like to hand you over to Mark Steeves, Non-Executive Chairman. Good morning to you, sir.
Thank you. Good morning, everyone. And thank you all for attending. My name is Mark Steeves, and I am chairman of AIM listed Energy Pathways PLC. We have a great opportunity at Energy Pathways. The Marram gas field in the UK Irish Sea, a proven gas discovery, surrounding infrastructure all in place, easy to bring to market. We have a high-quality management team led by our CEO, Ben Klube, who's going to do the bulk of the talking shortly, who knows the UK Irish Sea very well. We know that the development of Marram presents lots of other opportunities in the vicinity, further known, proven, undeveloped gas reserves, but also further less well-known reserves, as well as practical opportunities to play a role in the decarbonation of industry in the region. Russia's war in the Ukraine has changed the energy market. The plus side to this, it has been to make us all realize that the critical role of gas in the energy mix is really significant, particularly in this country, in our domestic UK. The market has come to realize the actual advantages of domestic gas over the environmental and socio-economic impact of some alternatives, including imported LNG. Specifically, and I quote the North Sea Transition Authority, domestically produced gas has an average emission intensity of 21 kilograms CO2 per barrel of oil equivalent, whereas imported LNG has a significantly higher average intensity of 79 kilograms CO2 per barrel of oil equivalent. Marram will actually emit significantly less again, at no more than 5 kg. That's the data. So the UK government, the NSTA, UK government of whatever flavour, realises all this. Gas is key to energy transition, not least because it gives us, the UK, time, but also because gas will be a catalyst that enables the UK to transition to and facilitate other technologies. First and foremost, it's about Marram, and as Ben will outline, the near-term development of Marram has exceptional economics with rapid payback. The net asset value of this project alone is over 15 times our pre-money valuation. So 18 months to production and significant cash flow. This is a great opportunity. And over to you, Ben, for the detail.
Thank you, Mark. So, as Mark has outlined, the company is an energy transition company seeking to supply domestic gas to the UK and provide the UK with energy security and assist its transition to net zero. We have a foundation asset, which is the Marram gas field development, which is located in the UK Irish Sea. It is a fully appraised gas field of in the order of 46 billion cubic feet of gas. It is a simple, low-cost development in shallow water, and it generates excellent returns for investors. We estimate the NPV of the project to be in the order of £100 million, delivering a rate of return in the order of 70% and pays back within 12 months. This development opportunity has the prospect of providing gas supply into the UK in relatively short time frames and can throw off significant cash flow for shareholders and provide investment for future growth. Now, this particular part of the UK Irish Sea is an area that the management team has worked in before. It has good familiarity with it and has identified significant undeveloped gas resources, which we believe have been overlooked. We estimate those to be in the order of 2 TCF of gas, and the company has established an early mover position to take advantage of that potential. We've submitted a number of requests for new licenses in the region that are being advanced with the UK government, and there are other fields that we've identified that essentially can be brought to market in a relatively short time frame. So those resources we're targeting with short cycle in the order of 134 BCF of gas. Furthermore, what makes this region exciting is its co-location with a number of other energy assets. This region has significant wind power generating capacity in the order of 7 to 8 gigawatts of generating capacity, either existing or planned. It has potential for carbon capture storage reservoirs, and it is closely located to the UK's leading hydrogen hub development projects, including HyNet Northwest. The company has established a strong management team with expertise across the energy space. A team that has worked together before on previous ventures and deep experience in the UKCS and development of gas and commercialising gas projects. We have expertise on the board in the clean energy front with Horacio Carvalho, who has a number of years' experience in the development of the renewable sector. So the opportunity, as we see it, is around the UK gas market and the critical role that gas has to play in the future of the UK energy supply. Gas is going to be have a critical role to play in the UK energy market for decades to come. That is an inescapable truth. And however, as we go forward, domestic gas supply is going to decrease significantly, and by the end of the decade, 80% of domestic demand is going to be met by imports, and increasingly those imports are going to be LNG. By the nature of that, the LNG is a significantly dirtier fuel supply compared to UK domestic supply, and so the mere ability of generating gas supply from the UK resources, it will displace imported LNG and significantly reduce the UK's carbon footprint. Gas also has a critical role to play in the UK's energy transition, and that is because as renewable wind power generation increases, there's going to be a need for flexible power generation, and gas has a key role to play in that it can provide that flexible power generating capacity to increase renewable wind penetration into the gas market. As Mark has commented, there's been a change in the pricing of UK gas, and that is a reflection not just on the war in Ukraine, but also with the dynamic that the UK is increasingly importing its energy supply, and effectively UK gas prices are now linked to global LNG prices. So this slide shows the location of the region that the company is initially focused on, the Irish Sea. And as you'll see, in the center of the map is the location of the Marram gas field. As you'll see, this region has an array of energy assets in it. Immediately to the west, the red blobs there are the Morecambe Bay gas fields, which are late life gas fields, which are now significantly depleted. You'll see there's gas pipeline infrastructure that goes to shore, which are the red lines, and that there is available capacity in those pipelines for further development of gas fields. You'll also see the wind farm generating capacity of the region, which are the blue shaded areas, and the blue lines, which are the associated electricity transmission lines. That is essentially setting out that there is significant renewable wind generating capacity in this region. And then to the south, you have the old Liverpool Bay gas fields, which are the blobs in red, and that is the UK's leading carbon capture storage project, which is tied back to the HyNet Northwest project, which is the UK's first hydrogen hub project. So we see a lot of potential for the Marram gas and new gas resources to be brought to the UK market and integrated into the energy transition for the UK. This region is Marram is located in shallow water, and it's got short distances to existing infrastructure, which make it a low-cost development environment that we're operating in. This slide summarizes the value and the resource potential of the Marram gas field. NPV of the Marram gas field we estimate to be in the order of £100 million, which is circa 15 times that of the post-listing price of the company. The economics indicate that payback will be within 12 months, and it generates a high rate of return of 70%. We estimate net cash flow from the first 2 years of production will be in the order of £100 million. And just to show that this is the attractive economics here that we're describing is not just an aberration of the stronger gas prices that we see in the market. This project break-evens gas price is in the order of 35 pence a therm. The reserves are summarized on the bottom half of this slide, reserves and contingent resources. The combined mid-case contingent and reserve resources of this field are in the order of 46 BCF. However, the thing to note is that the reserve range is very tight on this field, and that is a reflection on the low subsurface risk associated with this field, and that enables this field to attract, we believe, debt financing for development. So Marram subsurfaced. The simple message here is this is a very well understood field with very low subsurface risk. We have good subsurface definition with 2 wells drilled into the Marram structure, and it's covered by 2D seismic, which we've reprocessed. The reservoirs we have here are very good quality. Ormskirk-Aeolian sandstones with great porosity and permeabilities. The reservoirs we're producing out of here are the same reservoirs that have been produced out of in the region, and so there's plenty of analog data and recovery factors that we see on these fields is in the order of 85%. And there's no sort of nasties in the gas composition here, and given the high quality nature of these reservoirs, we see a lot of potential for this reservoir and similar ones to it to be used for future gas or hydrogen storage. So the Marram development concept we have in mind, as I mentioned before, this is a shallow water development environment, 15 to 20 meters. Plan to drill 2 horizontal wells. They're shallow wells in shallow water, making them cost effective. We'll tie back those 2 wells subsea to the existing infrastructure, which is a short distance away, circa 15 to 20 kilometers. And given this field is fully appraised, we've already submitted the field development plan to the government regulator, and we're now in the final phase of the development approval process. We've already selected our vendors for the front-end engineering design work. We're progressing through optimization studies for the tieback, and we've already received offers of debt financing for the development, which are in the order of 70% of debt. We estimate the total capital cost to be in the order of £70 million. Now, given it's a simple development approach in a low-cost environment, we believe that we can bring this project to market in a relatively short time frame, and we're estimating the potential to get to FID within 6 to 9 months, to be followed by an execution phase of 12 to 18 months. So in summary, there's potential here for revenues by the end of 2025. As I mentioned before, this region we see as having a significant growth potential. First of all, there's opportunities that we're pursuing that are similar to Marram, that are in the order of 130 BCF of gas, which are similar tiebacks, discovered resources that can be brought to market quickly. We have requests in with the government regulator for those licenses. Furthermore, there's additional discovered and exploration resources in this region, which we believe are overlooked. We're making progress towards securing those additional resources. This region is unique in that not just having untapped gas resources, it contains a significant renewable wind energy capacity. There is existing infrastructure, electricity transmission lines and gas pipelines, and there is also carbon capture storage reservoirs in the region, as well as the development of hydrogen hub projects with the HyNet Northwest project in and around Liverpool and the Manchester industrial area. So with that, we see great potential to integrate the untapped gas resources of this region and connect them with those other energy assets, and to deliver for the UK low emission energy supply and secure energy supply for the UK going forward. So going forward, here's an indicative schedule. So there's over the next 6 to 12 months, there is significant news flow across all of the arms of workflow that we're progressing across the Marram project, environmental approvals for that project, We're expecting news flow on project financing across the debt and the equity arenas, and news from the license requests and the new acreage that we're pursuing, as well as the developing partnerships on delivering clean energy supply for the UK. So in summary, the macro story is it's clear that domestic gas has a critical role to play in the UK's energy security and transition to net zero going forward, and that's going to be the case for decades to come. And with that change and the increased connection of UK gas prices to imported LNG, gas prices we anticipate will remain strong in that space. Our foundation gas project, gas field, is in the order of 46 billion cubic feet of gas. It's fully appraised. It's ready to be brought to market quickly, and development cycle is short, in the order of 18 to 24 months. And it generates excellent rates of return and high value for investors. There's a big growth story in terms of the untapped gas resources of the region. There's other short cycle development opportunities available, similar to Marram, and the company is positioned as an early mover into securing all of those resources in the region. And there is good potential to integrate these gas resources in the region with the other energy transition assets, including renewable wind, gas and hydrogen storage, backing up power generation, and hydrogen. Thank you. That's the end of the formal presentation.
Perfect. Thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab, which is situated on the top right-hand corner of your screen. But just while the company take a few moments to review those questions that have been submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. As you can see, we received a number of questions throughout today's presentation. And Ben, if I could just hand over to you just to read out those questions, that'd be great, and I'll pick up from you at the end.
Sure. Okay, I'm going to read them in the order they arrived. So the first one is regarding the company's footprint on social media. Mark, probably one for you. I mean, what's the approach to communications and utilizing social media platforms for the company?
Well, we recognise the need to communicate with all stakeholders. Social media is a critical communications tool for all companies. So we're committed to ensuring we have appropriate and effective comms, PR comms, IR, etc. We have a strong investment story to promote, and we'll do so in a responsible manner.
Thanks, Mark. Got another question here that notes the admission price of 4 pence and references your IPO broker research that had a target price of 24p and a longer term target price of 50p. Okay. Just what's the view on the delta between the current price and the broker forecasts?
Yes. The Marram project has an NPV10 of £100 million around about, versus our current market cap of 6. The target price, the upside value referenced within Optiva's note, it factors in the project, as well as the potential to obtain further reserves through outstanding license applications. The analyst's model and its recommendation is wholly independent.
Okay, and just on that, I mean, there's also a question about, internally, what sort of timeframes do you put on achieving those sorts of price targets referenced in that note?
Well, it's not appropriate for us to discuss target share prices and timeframes. The job is to focus on progressing the operational work streams to move Marram to FID. Obviously, ensuring transparent, regular communication in terms of our listing obligation. Yeah, I mean, hopefully the market will recognise our progress as we achieve the targets.
Perfect. Thank you. Had a question here from Andrew, who asks why you listed on the main market versus AIM. You are, of course, on the AIM market. So, Ben, do you just want to touch on the process of the RTO with Dial Square?
Yeah, sure. The process, there was an RTO transaction. Dial Square is a company that was on the standard list. Given the size of the company, listed on AIM, and that process was concluded at the end of last year, end of December. And so we started trading on the completion of the RTO at the end of December.
Great, thank you. Got a follow-on question from Andrew, who asks if there are any regulatory hurdles that are outstanding in regards to future development.
So with any development in the UK sector, there's a regulatory approval process, and as is normal, that requires a government approval of a field development plan. We are in the middle of that process with the Marham gas project. We've progressed along that process already, and we've now moved to what's called the authorization phase, which is the final phase of the field development approval process. Running in conjunction with that is the environmental approval process, and again, we have made good progress moving through that exercise, and an interim environmental statement has been submitted, feedback received from the government regulator, OPRED, and we're anticipating a final statement in the coming months.
Okay, great. I'm going to combine these next two questions just because they're on the same theme. But one question relates to, can you give an approximate cost to production, which was obviously referenced in your presentation. One is the approach to funding. You know, how are you dealing with that? Again, I know this is something that we referenced in the RNS this morning.
Yeah. So firstly, the company carries an estimated development cost for the Marham gas field of in the order of £70 million. Part of our future work journey is obviously to firm that cost estimate up as we complete front-end engineering and design work. In terms of the financing sources for that development, again, that's an activity that we're working through. As I mentioned in the presentation, we have offers of debt financing. The nature of this development clearly has the ability to attract debt financing, given we've already received offers indicatively. Those are in the order of 70% of total capex costs, and in parallel, we're progressing sources of for the equity component for the development, and we've already received some expressions of interest there as well, but we will be working through that in the coming months.
Okay, great. And I've got a last question here, which I think is very appropriate in terms of the macro. Could a change in the UK political landscape, what sort of impact would that have on you and future license approval?
So good question. And first of all, it's probably worth noting that all existing licenses, including the Marham development, based on Labour Party's rhetoric, would not be affected by a change in government. in terms of and the development approvals all associated with developing the Marram gas resource and the licenses that are already in existence. What is clear to us is that energy security and low emission gas supply is a priority for both political parties, is inescapable. And given that the gas resources in this basin are will provide energy security for the UK and can effectively reduce the UK's carbon footprint, then I think the investment proposition here will be attractive to both political parties, and what is being said, let's say, pre an election versus what actually happens in practice may well be a different thing, because really the facts speaks for themselves. This is a great opportunity for the UK to secure its energy future and energy security, and contribute significantly to its journey to net zero.
Okay, great. Thank you. That's all the questions that have been submitted.
Perfect, and thank you for answering those. And of course, the company can review all the questions submitted today, and we'll publish those responses on the Investor Meet Company platform. But just before redirecting investors to provide you with their feedback, which I know is particularly important to the company, Mark, could I just ask you for a few closing comments?
Thank you. Well done, Ben. I'd particularly like to endorse what you said at the end about the politics. The facts are the facts. The case for the development of the Marram field, our cornerstone asset, is compelling. The fact that there are a number of Marram lookalike opportunities, and that we have the intent and ambition, the capability to participate in the wider energy generation and storage capacity of the region, is hugely exciting, and it starts with Marram. But thank you, Ben, for organising this. Thank you, Alex, and thank you, listeners.
Mark, Ben, thank you once again for updating investors today. Could I please ask investors not to close the session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Energy Pathways PLC, we'd like to thank you for attending today's presentation, and good morning to you all.